Hey, gentlemen, I hope you had a wonderful day. I was out yesterday. I got some evidence. I was hooked up to the IV. Everything is good. Don't worry. I was going to talk to you today about the bonds, and I have a watch list, but I'm seeing here right now on this screen that Fitch has downgraded the United States from AAA. We have held this rating since 1994. They said the rating downgrade of the United States reflects the expected fiscal deterioration over the next 3 years, a high and growing general government debt burden, and the erosion of governance relative to AA and AAA rated peers over the last 2 decades that is manifested in repeated debt limit standoffs and last-minute solutions. So they gave the warning on May 24th. They actually did it. Janet Yellen, she responded. She said responding to the downgrade, called it arbitrary and outdated. But this is where it gets better. If you take a look on this screen, futures are getting clapped, or at least after hours. But the futures on TD Ameritrade are not moving, and the treasury market is still closed right now. So Chattadonia, this is about to be crazy. We are going to have a lot to talk about. I was just about to talk to you about where the bonds are at, the 10-year, the 5-year, the 2-year, the 30-year, that whole theme of bonds breaking out and the bonds breaking, but not how you think. It is starting to arise, but now mixed in with this news, it is going to get interesting. So I'm going to go over the bonds. We're going to go over the calendar. Then I got a couple plays. We closed out of a 2,000% option trade on ANET, and I'm going to go over that with you, as well as 2 more plays that I'm looking at. But this is already crazy. So Chad, drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. If the market gets volatile, if there's earnings downgrades, yeah, you're going to want to be here. I'm recording this live. I might even go live like halfway through this. So we'll see how this one plays out. But Chattadonia, God bless you, and let's get into it. So the first thing I want to start with, I was like, wait, what am I about to go to? I'm looking. This is actually crazy, and we're going to have to see the follow-up. But why I was going to talk about the bonds is because after today and just looking at this schedule, all that matters this week is the non-farm payrolls on Friday, and then whatever happens with Apple and Amazon on Thursday. We had AMD after the bell, as well as like ELF and a few others, but AMD didn't shock anybody. It didn't do too good, didn't do too bad. I believe their guidance was somewhat conservative. However, people still feel good about the AI stuff. We'll see how the general market takes all of this, but beyond that, we haven't really moved, and that's why I'm saying just watch for the data. We haven't done much throughout the days. Yeah, the earnings are there, but what everybody is looking out for is the big earnings, then the data, now what leads into Powell, and now we do get to deal with this new stuff. However, beyond just the earnings and all of that, we've been saying the main theme of the week has been the bonds breaking out, and that's what we had today. So what this chart is showing you is the S&P 500 overlaid with the 10-year bond. I may have to remove this. Let's see. I'll give you a cleaner one so you can see what I'm talking about, but today was the first close on the bonds above 4% in a decently long time. And anytime this has happened, we have started to see the market get shaky. This is something I've been saying for a while. Is like, hey, is it going to be 2001? Is it going to be 2006? And I was just honestly saying how I don't see the markets climbing too much higher if the bond year, especially the 10-year, starts rocketing up above 4%. And usually once it goes above 4%, that's where it just starts running through all sorts of levels. So we've brought this up in the past, and you could even see now, this was that other chart I wanted to show you. This is just looking at the S&P 500 overlaid with the bonds. Blue line is the S&P, and you can see we're back up, but anytime the yields were climbing back up here, the market either during, before, or after, things started to get volatile. Literally every single time, even when we started to come off of the October bottom, what led to that October bottom? It was rates going past 3.25, 3.5, then 3.9, going back below, and then ultimately breaking above 4. And then when things came down and then the rates came down, the markets were able to chill out. But 4% always added a lot of pressure. Now, here's the best part. that's just what we have gotten this year. And the way I'm looking at it now is just, I hope you guys remember what happened in 2022 when we first started to drop. If you remember the bonds, do you even remember Michael Burry taking a short on the bonds and then he covered it and then it ultimately went even crazier? Well, it's kind of the same effect we were having here, except that time it was at like 2%, then 2.5%. But then once we started to breach and get that pressure, any of the rallies in reality started to hit once again. So this has been the major theme, and now why we're bringing it up is, one, today we closed above 4. The 30-year bond hit a new high, I believe, since like 2020 or something like that, or a little bit longer. But now if you look at the 10-year, if you look at the 2-year, they are approaching a level that they were at just about a month ago, or maybe 2 months ago. Actually, is that 3 now? Okay, no, it's about 1 month ago. But I was saying this today. Has anything really changed? No, but we are moving in that direction. I mean, things like a Fitch downgrade are not helping, but the general idea here now, and I said it, do you average? Do you go after it? You were just here not too long ago, so if you didn't move here, why are you going to move here? But everybody wants to see, is this going to be support? 2006, do the yields go up to the upper bound like it's Japan and then calm down, or does it actually break out and then go into the next level? Like I'm saying, this is what we already experienced in 2022. I hope you guys remember that. It was one of those instances. The bonds came down a lot. They recovered a little bit. Then they came back down to the lows. They bounced around. But eventually, when they did break, it did do the little bounce thing, but eventually it just started getting crazy. And then you set a whole nother regime. That's what I'm trying to say here. We're about to repeat all of this, or it's about to bounce off of it. Then we wait. And then again, maybe something like a Fitch downgrade changes everything and we see what happens. But Chad, this week should be simple. You should get more volatility now with this downgrade. I think it's going to be big. We'll eventually get over it, but this might start to move things and now just tie it into the earnings. And then after this, the real answer of this will be tying it into Jackson Hole and then where we go from there and what Powell says. But now, let us get into the plays. So let's talk about some of the plays for tomorrow. I did have a couple of earnings plays, and I want to see the names that did do good as we're seeing after hours, even though the market's coming down. AMD's holding up. ELF is still going up. Those are two potential plays. But now ANET, this was the 2,000%er today. I actually made just under that, but we bought it yesterday at about 65 cents a contract. This is a play we've played in the past, but the reason why I have just been doing that 2 standard deviation trick, I literally outlined it on the watch list about 2 weeks ago. All you got to do is take what's priced in and then double it. And then if that number is out of the money, 2 standard deviations outside, if that's still below like $100, $60, it's around a decent deal, but obviously it's relative and depends on the company. We've only done it a couple times here, and I think it's few and far between, but in this case it worked. But now there may be a potential follow-up, but what I want you to see is what we did with it. So I grabbed it at 50, 65 cents. That was me on the top tick. Gave a new meaning to top tick Josh over there, but I sold out at 10.20, so I made $1,020 off the $50 investment. But what I did right afterwards, like a couple minutes later, is I did a rollover to the August 18th 215, but I bought it at 75 cents. So I only bought one. I spent $75 on the rollover after going $50, $60 to $1,000. I put another $75 down on a 215 for next week. I was saying all day I thought the stock could go to 200, but I said once my contract hits 1,000, I know I'm probably going to want to take it. So I do think ANET could have follow through, so that's why I rolled it over, but this play got demolished immediately. But what I want you to see is how kept me in the game. I was able to play it small, and if the momentum continued, we could have made some money. But if the momentum turns, you could see how this benefited. And now, depending to tomorrow how it plays out, you may watch the in the money do better. But essentially, I sold out at $1,000. It came down to like $500 to $600 here, but we lost on the rollover contract. I think I only lost like $37, even though that was 50%. It was just a lot smaller. So watch the rollover play. I think it'll be interesting. But ANET, ANET. That was a killer. And keep your eyes out now for these 2 standard deviation plays. If the price is decent and the stock could move, we've gotten a couple, but we only got like a week or 2 left of earnings, so we'll see how that all plays out. But that is play number 1. Then play number 2, if you want to talk about hype earnings, I'm not going to tell you about AMD. I'm going to tell you about ELF, the makeup company. They reported like 136% year-over-year growth. It was a stellar earnings, raised guidance on revenue, EPS. I mean, the company is growing. I was saying it all day today. As far as any companies that the stock is up 100%, not too many of them have over 100% had an increase in their revenue. So I really like this. The only problem I don't like is that just a couple months ago, the stock was at $70, but like I think it was even lower, I want to say. Yeah, like $27 at one point. So they've went up a lot, but there's a lot of hype behind it. The earnings are good. I'm hesitant on whether or not I'm going to play it, but watch this one tomorrow. I think it could be good, and I just like that earnings, but keep your eyes out for that. That's play number 2. Then play number 3. This one's been messing with me. I've been holding it since the Roctavian approval. I do believe also you will be getting some PDUFA stuff from them sometime middle of the year. That's when they're on the schedule. But BioMarin, I was talking about the average down. I'm like right at my break-even price right now. We've been holding it, but pretty much I'm looking for average down between like 85 to 83. I wanted to take it today, then it bounced. If it does come back, I'm going to be looking for that. Otherwise, I'm hoping this makes a run so we could get out of it, or we do get some hype with some of the biotech stuff, because I thought the data and everything from the earnings was good, but it has been moving slow. So gonna watch out for those plays. Again, a lot of upside plays there that we're talking about, but now I want to see how this is going to play out tomorrow. I want to see the effect it has on the bonds. Believe it or not, if you do get a credit downgrade, it may seem bad for credit, but you may just watch everybody rush to bonds again, and maybe this is a trend where every time we get to 4, there's a credit something event with the bonds. So we'll see what happens. But Chad, that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember your interest will determine the subject. My friend, choose the lesson. And if you have already gone through the lesson, remind yourself, because the student determines the lesson, not the teacher of life. Oh my goodness. So, Chad, get ready. Maybe the world gets a little crazy from here, but either way, we still got to bring it to the end of the year. Welcome to another earnings, another month. And remember, August, September, seasonality gets crazy. We still got Powell and all that, but you're ready, prepared, and the long-term and 10% will take you throughout the way. Otherwise, finger to the sky, baby. Amen. Amen. I love you, Chad. That's it. I'll see you in the morning. And that's all. That's it. I'm awkward. I'm like hyped, like sick, not hype thing, but this thing's crazy. I'm not even awkward. I'm like, bro, what happened every time at 4%? Really? Really? You want me to? Okay, bye, horn.